Okay, so this is based on 10 years of UK investing. I've got a sort of personal portfolio there, and my own group of investors have probably got about an estimated £60 million of UK properties. So like Prashanth, I rather like the core sort of mantra of being able to create a sustainable business for our partners. I'm very proud of that. Obviously, the success is not only my own business, but what my clients are doing for me. Okay, so we're going to get straight into this. I make a slight apology before I start here. Some of my slides are slightly listy, and the reason is if I couldn't come to India and talk about the B word, about Brexit, and also we've just had our UK budget. So I thought, speaking to you at the lunch, it was nice to share with some of you. I get the impression a lot of you are very, very aware of what's happening in the UK, both in the UK property market and the UK economy. Quite an exciting time, if I could use that word carefully with the media. So let's look at some statistics. Okay, so some information that's come out recently from 2002, 2015. The reason why that's I think is quite interesting is we had our global financial crisis, our UK recession, halfway through that period. And you can see some of the city growth figures for that. I have to caveat, I realise that in India you probably beat us on population growth, but I rather think for the UK that's pretty good. I'm sure on the map there you all know where London is. London has grown, but at a lot less rate. So I do know that the room has a lot of UK property investors. I think this is an exceptionally important statistic. And obviously it's growing, it's snowballing as well, the cities there. So I know that Prashanth and Oksana there have your interest in mind in terms of your locations. Certainly the northern concentration there, that's what we call in the media the northern powerhouse. I actually live in the south, but all my personal investing is up in the greater Manchester, Liverpool area there for that reason. So that's a really important slide. If you boil it down without getting too complicated for those of you at the back, that's in order there. So if you notice, effectively, you can see where the orange is. That's the growth on the bar charts there. And those top sort of 10 cities and towns at the top there are in the northern regions. Okay, it's not London and the southeast. London and the southeast does have great value, and this is not to say that you don't go into those areas, but you can see where some of the numbers are going through there. Even the guys that are growing 25 to 33%. Median turn, those up at the middle 60s, and then those are over the 100%. It's a really, really important slide, that, and that's where certainly our overseas investors and our UK investors are going to as well. Okay, just a bit of news. So this is taken from November 18. It's not all Brexit, by the way. There are other things going on in our country at the moment. So things like more fast food shops, vape shops, the substitute for nicotine and tobacco. Obviously, a lot of food deliveries are being done by moped and scooter, and that's a big piece here. So, yes, I do invest in residential property, as you'll see later on. Pretty much all of the deals I'll show you later on are my own portfolios. I do residential and I do commercial, and I'm very aware of what's going on in our high street with online shopping presence. Coffee shops, etc. People now wanting to go into our high streets for experiences, and we'll see that on our list later on. And some of the high street vacancy rates there's quite a lot, and we'll see from the slides later on, about the government's help for the business rates community. So there's a real push, certainly through the budget, and some of the initiatives that are going on at the moment. Okay, so that's hot off the press literally the other week. Other things are going on, so fracking. I know that we are, obviously everybody's aware of our environment in the world. So basically on that map there, again, this is for the future now, because this has only just literally been given government go-ahead literally a couple of weeks ago. For example, in the USA, they've got 2,700 fracking sites. So the concentration there, basically blue is the heavy concentrations and the purple indicate future licenses there. It's interesting with the Northern Powerhouse there, where that's probably going to have an effect in the future, because resources and energy are a big piece here. So that's more of an information type slide. Again, Savills report there, if you can see the maps there, the famous Monopoly game. Let's try and go for the hotels, not the property, the greenhouses. But you can see here, Savills is one of the better produced reports, that you can see there that there is a move up north. I'm not saying for one moment, say for example, Greater Manchester is going to take over London, but interestingly, I'm into history. Our industrial revolution was much northern based. Not quite sure that will go back up to overtake London, but you can see there that Birmingham, Manchester are probably starting to get more precedence. Is it to do with the third extra runway at Heathrow, which will create a hub? Is it to do with our expanding nuclear industry? Is it to do with the high-speed rail link? I think in the case of Birmingham, that probably is the case. Okay, but some of those figures there are very large. It is a prediction. Savills here, this report was actually produced a year ago, and we're already seeing some of the piece there. It's a commentary about residential and commercial. So as a real estate investor, I want to be able to look at both sides, and I do invest in both categories as well. Okay, so pretty important stuff there. Trends, I've got a couple of slides about trends here. I do travel a lot, I enjoy travelling, and you see trends. So your buy-to-let, your homes and multiple occupancy strategy, Airbnb, serviced accommodation, we're using one of the bigger providers there. The key word in property investing is about quality. So if you're going to work with clients, it is all about the quality of the build and your tenant base as well. Mediocre won't cut it in the UK property real estate industry. I'm pretty certain it's the same in Bangalore, and I'm certainly in Dubai as well. Town centres regeneration, there's a huge piece in the media for those that you read the proper financial press at the moment, where you've got a lot of government help now toward the business rates. It's probably why it's starting to help the north-south divide, and that's why, for example, the BBC is moving more assets from London up into Media City and Greater Manchester, as it says there. The hubs, these hubs are becoming important. I know that you have them in your country here, Greater Manchester, Liverpool, Cardiff, Hull, Nottingham, Stoke, Doncaster. You get them in Glasgow as well. And this piece about metro mayors. So in the UK, mayors have more precedence over politicians in our process here. Central government is now giving those regional hubs far more support and resources. Okay, warehousing for Amazon drones, that's coming now. I'm already looking at America. I always feel that America's probably ahead of us in this piece here. You are now starting to see this come good in the UK. And I think that will just gain more scope. Lower energy, we mentioned about fracking before. Energy is becoming a huge part of people's considerations, whether it's low energy houses or the location of your distribution centres to do the deliveries there. Airports and shipping, haulage distribution centres are vital. I don't think they'll change very much, but I think from the large warehouse to the final mile delivery with, say, Amazon deliveries and possibly drones, that might get affected. Post-Brexit, so we get the B word in there. I've actually got it written down on there at the moment. And the enterprise zones, I think they'll come back, and they're just investment hubs. And they've been outside the regions, the poor areas in the UK, and they do work. The north-south divide, I mentioned the BBC Media City already, and then more regional help. So previously, where I suppose pre-Brexit we were getting funds from the EU, that will now be self-generated from government to go out to the regions there. And in the past, that has worked very, very well. I guess the best quality outlets here, you're seeing this in shopping malls in the USA. Poor quality shopping malls will be on the way out. People now want to go into locations, and what they want now is they want to go and have experiences. Yes, they're going to go and buy, they'll go and try a phone, what have you, but you can't get your hair cut and drink a cup of coffee on a computer. People want to go there and experiences, and it is all about quality, and we're getting involved with this sector ourselves. As it says at the bottom there, collect and pick up as well. Experience type businesses now, this is the way ahead. Okay, if you want to get your hair done, your nails, you want to go and socialise. People are getting less and less sociable with social media. I'm seeing it with my young 2 children. I'm having to get them off the tablet and get out the house. Okay, I've got my first smile today, that's good news. Okay, but this is where it's going. Adopting trends, Prashant was saying about the future. It's all right seeing where we are now. Where is the future going? Where are people going? And in property, we must be very much aware of that. Okay, we deliver to demand. We don't make it up. We see trends and we adapt to it. And that's why I really like small individual business. When you talk to people, where they've got the ability to move. I get this versus the big corporates. I've got a very unusual background. I'm not a corporate person. I was probably more of a military specialist, but I'm even seeing this now. You're seeing the intelligence that's changing. Shared workspaces, this word, I like this word wellness. There's another word called craftsmanship, where I like good things. You know, came into the hotel today, this is, by the way, don't go to dinner party with me. I'll be looking at the soundproofing quality of the walls in the room. It creates a different atmosphere, okay? Again, some more smiles, this is good. Okay, from that to desire to socialise. Socialise at work, but also socialise in your personal lives as well. And that's starting to affect, so bigger developments now. Notice down in London, they're starting to put, instead of just all residential, they are starting to put small commercial enterprises like hairdressers, delicatessens into the base to make it more of an experience. People are starting to think a bit more outside the box. Part-time zero-hour contracts, it's probably an unfortunate term here. People want more flexibility. I had an 18-year one-service career. It's very unusual now. I think the millennials, the Zulu X-ray generation, if I can use those terms there, people want more flexibility. Do they want more flexibility in ownership of homes? Probably less so. Okay, that's a generational thing of wealth creation. Do they want great commitments in their careers? Probably not. Do they want to start putting their careers together? Well, as a real estate investor, I need to know that in my residential properties, and I certainly need to know that in my commercial properties. Okay, high-tech hubs, really big thing at the moment. So cryptocurrency, artificial intelligence, robots, machine learning. Okay, this is important. We want to be on the face of this. Banking is getting less face-to-face, certainly in the UK, and I'm not a finance expert by any means, but what I am seeing is banks are closing. So in the commercial sector on your rents, they would be considered a good 15, 20-year lease tenant. That is now no longer. Last year we had 2,700 bank branches closed. You get your challenger banks don't have branches, but as the traditional high street banks close them down, then there's the ability there to have more auto teller machines, you know, the cash dispensers. We are in the UK, we are going more towards cashless. Why is this a consideration? I've got a large commercial development at the moment, and we are trying to get an ATM into the outside of the building. Okay, people wanting to work, live and work nearer to work. Energy is going to be a factor. It's a factor now, and it will just get more and more as the world's resources get used up. We're seeing a little bit of wage increase. Amazing, our economy. We've had very, very low interest, almost the lowest for nearly 300 years. It's amazing how our wage inflation has been very muted. All the markets are saying this now. We're starting in the construction industry, we're starting to see wages come up. It's because our unemployment levels are the lowest for about 40 years. So if you see in the media that the UK economy is not going very well, the employment statistics would say otherwise. Okay, raw material prices, etc. As a developer constructor, we're very, very aware of that. Okay, I thought I'd do this slide when I set this up, and I thought this would be bragging rights about our population statistic. I'm rather expecting talking to an Indian audience. This just pales into insignificance, but you know, just bear with me on that. On the migration, Prashant talked about this, about supply and demand. Okay, as property investors, we want to be going into the areas of demand. Okay, it's a famous ice hockey analogy. Famous ice hockey player said, you go where the puck is going to, not where it's been. You don't where the crowds are, you're seeing where the trends are going to. So with net migration there of just under 200,000 new births a year, we're getting about our sort of net annual growth, about 380,000 people a year. Okay, the new home building there for the best part of 20 years averages out about, doesn't matter what the political party is, the construction industry of new builds has been pretty constant. Okay, people say to me, I'm a generalist, I'm an analytical, I want to know this information. So clearly there's a major mismatch. Okay, we haven't got enough housing stock, and we're not building enough new homes. This is the new homes piece. Okay, a lot of social housing, 1.1 million people waiting on our social housing waiting list. They're either homeless on the streets or they're being put up in hotels and bed and breakfast accommodation. It's a huge drain on our wealth, and we have a very good welfare state in the UK. This is a drain, and this is where our property investors need to be aware of. Okay, cottage industry there. So even year on year with our existing empty homes, we call them brownfield sites. It's called a cottage industry. There's quite a lot of small investors who are bringing these properties back. That's a finite resource. When they're taken up, you can see yes, we are new house building, but we are bringing the older properties, and that's one of my personal models there. Obviously, we had that our terrible high-rise fire in Grenfell in central London a year or so ago. So of all the buildings have been checked out in the piece there. So all of those high-rise buildings where they've got that construction technique, they've now been removed from those buildings. So it's creating more and more demand for property. The Julie Rugg report in 1997 suggesting that was over 10 years ago, 250,000 new house building. I would suggest we're up at 380,000. And that is why you're seeing property prices in the UK. London is its own little zone here. You're finding property prices, and there are parts of London that are still doing well on certain postcodes. You're finding that house prices in the regions now are increasing. Certainly what we call distressed property prices properties that need doing up. I think that's really important. I mentioned it before about UK unemployment. So yes, it's property, but we need to know what's going on in the residential market and the commercial market there. Our unemployment now is the lowest since 1975. Okay, I think if you go to the country, you look at the American statistics, I'm sure it's the same in India, you'll get to a stage through history where everybody's fully employed. You're going to get your sort of infirm, disabled old people who physically can't earn. Statistically now, this is as low as it can get. So when we do exit, it looks like we've got the withdrawal bill signed off this week. It's been quite an interesting time trying to put this presentation together over the last week. Are we in Brexit? Are we out of Brexit? And then I had to keep changing the slides. And I think we're now on the withdrawal bill here. And I'm glad you're smiling, because I'm smiling even more that we've made a decision. So it's good. We can move forward. Okay, and I just said about the Northern Ireland border, that was probably about 24 hours out of date. That looks like it's been resolved. I think Spain's put a bit in about Gibraltar, but I think we're pretty much there. I think everybody in the UK, house builders, investors, people, your left wing, your right wing, your socialist, you're within the business community, everybody just wanted a decision, and we can start to move forward. A lot of the media's talking about contingency planning. Now we can start to move forward. Interestingly, a year ago, there were supposed to be 230,000 banking jobs leaving the UK to go into Europe. Last week, that figure was, over that period, was 630. I think that's pretty telling. Media's all hyping up, yeah, everybody's leaving the UK. No, they're not. Okay, and that's why the employment figure is pretty important. Bit of budget stuff here. I do apologise. So there's a few shopping lists here. We're going to get a bit sexy and start to look at some buildings, and I do promise it gets a bit more exciting. But some of you on the analytics might be going, this is really interesting. Of course, it's all interesting. Of course I'd say that, because I'm presenting, aren't I? Okay, so the budget there. Now, a lot of the budget thing, you have your budgets. I know that you've got an election process going on in 2019 as well. Thank you for the people at the lunchtime that were giving me some updates there. So things like £675 million to transform retail zones. There is a real interest in the UK, not only from our own government, from sovereign wealth funds abroad, private investors coming into the UK now, where they want to really start to get our retail and our high streets back up and running. And I'll show you some good examples later on. Simplified permitted development rights. You've got your official planning, and then you've got permitted development rights. Official planning takes longer. Permitted development rights for investors means you can invest straight away and there's no delays. It's quicker, cheaper and easier for investors. Federation of Master Builders wanting to transform 300,000 to 400,000 units over shops. There are examples here, and I know Prashant's team are heavily engaged in that, as are we. It's a great technique. 500, in fact that should be 500 million, sorry, my apologies, housing infrastructure funds to build new homes. We haven't got enough. The government have now realised that. They want to invest in the high street and commercial as well, residential and commercial. We technically call that the UK as a market mixed use. You've got accommodation and business. Small medium enterprises to build new housing. So we've got £1 billion of banking guarantees, 500 neighbourhoods, etc., etc. Council caps have been scrapped. National living wage now, so I know this translates internationally, to come up from £7.83 an hour to £8.21. That's 4.8%. So our inflation at the moment is running about 2.4%. So maybe where we've had very little inflation and wage pressure, that might start to come in. On my rents as a landlord, I'm happy with that. We do treat our people fairly. We're running a business and we are ethical. I'm a very ethical person, so I think we've got to share that round a bit. First time buyer shared equity. So again, the government's now with stamp duty land tax, SDLT, the government now are really engaged now to try and free the housing market, get it moving. You move up, you don't move down, you move up. And then lettings relief where owners lives on board. So all of a sudden, fair to say in the UK market, landlords, and I am an investor, I am a developer, and I am a landlord in equal measure. I felt probably over the last couple of years it's been a bit anti-landlord. All of a sudden, the government now going to the private sector and say the government won't build enough affordable housing. Council houses, affordable houses, and social housing are pretty much they're the welfare housing. They're now realising actually it's over to business and investors like you guys in the future to come on board and take these units on. And I think this is going to be a real game changer. Universal credit. So what they've done here is our welfare system. They've put it into one. I think there were 6 welfare systems. They've now put it into one. Media's been it's been a bit heavy-handed, but what it's going to do is streamlining it because all of a sudden government needs to be more efficient. 2.4 million families better off. So they've been fiddling around with our income tax and corporation tax. So for the businesses, incorporation tax is 20%. It's 19% this year, and there's a belief that it's going to go down to 17%. So worldwide, that's attractive, and probably why you're investing in the UK. If you're into trees, because trees are pretty tax advantageous, they're going to invest 60 million. That Northern Power, so they want to create a whole forest east to west in the country. 800,000 new jobs. You can see where this is going. I always find that if America does well, the UK tends to, they sneeze, we catch a cold a bit later on as the piece goes. Annual investment allowing increase 200,000 to 1 million. Can you see all the trends? It's all now upward. It's all infrastructure spending. It's investment. And by the way, these 2 slides, this is all property. Huge change. Very big change from our budget from 12 months ago. SBRR, small business rates relief. Again, they keep upping the rate now because London and the South East, because it's so expensive, they're catching cold. Quite a lot of these large companies have been going bust. I personally think it's the online presence. I know a lot of people speaking to the breaker into the online industry. So all of a sudden now the government's trying to get the high streets to go. This is a very good initiative. And you've got the change there, so 25,500 for a small or a medium business. That's a saving of over £2,000 a month. Generally speaking, on high streets outside London, the South East, your business rate structure is about the same as a landlord rent. If you take one of those costs away, it's going to make that business premises very attractive. Common sense. Okay, there's a bit of if I use the term toilet humour, does that translate well here? So we've had all our, so I'm not rude to your culture, toilets, lavatories and restrooms, you know what I'm talking about. So even now, all of these public amenities have been reducing. It's because governments even put business rates on toilets. So they've now reduced it. So much so with the supermarkets now, government have taken the ATMs as business rates and a cash machine inside a supermarket. And they've had to reduce that. So all of a sudden, council have been there's a few smiles now. The council has been very greedy. All of a sudden, let's start to get ungreedy. If you charge for car parking spaces, people will be restricted to go to sites. It will affect my houses. People are nodding, and it will affect my business premises as well. It's all those little details. And then in infrastructure spending, our nuclear industry, the high-speed rail link, a real game changer. In a few years' time, you'll be able to it takes me 2 hours from Manchester to London. That will be an hour. That will be much quicker than trying to get on an aeroplane. And I rather like aviation, obviously. Okay, just a bit of mindset stuff, and then we'll get on to the Gucci pictures. This is a bit of a mindset here. So a buy-to-let for a UK investor will vest out sort of £6.66 a day. That's £200 a month. HMO, £16.66. That's £500 a month. If businesses are doing orientations, they're sourcing or consulting, you can see some of the day rates. The reason why I've put commercial in there, you may spend 2 years putting a deal together on a big commercial project. I'm just about to vest on one of mine. Once I go from that active investing stage, and you guys are investing in people doing this for you, that will then turn around to that hourly rate. So you can see this active passive piece. So that's why I just highlighted the hour piece. This is a lot of effort here, but you can see the types of thing that some of the UK markets were working towards. Capital growth here. For most property investors, I don't want to get too technical in the room. I'm sure that'll be for afterwards at the breaks. But effectively, most investors in the UK work cash flow and interest-only mortgages. When you get into the commercial arena, and you're working the bigger type projects here, you may get a very declared a low yield rate of maybe 8%. So some investors may look at that quite as being relatively low. I rather like that, and the reason is that your return on investment on these projects, I run my residentials at 20-25%, my commercials at 30-32%. Clearly, we've got all the costs to come out of that. When you're doing capital and interest mortgages, then your yield rate might be declared very low, but what's happening is your return on investment year on year is improving by about 3%. The terms on these mortgages are about 20 years. Okay, so yes, look, I really liked Prashant's piece there about cash flow and liquidity. So when you look at this and you take the long-term piece, so you're investing for 5, 10, 15, 20 years, these capital interest type commercial mortgages on those premises make very, very good sense. They do cash flow very, very well, and your ROI just increases year on year because you're taking a bit of cash flow out at the beginning, but you're taking the long-term view. Okay, and if you have a capital growth of 5% a year, it still means your property prices double every 20 years. That's what we're wargaming at the moment. Clearly, for the speculative side of markets will go up and down. But that's a very, very interesting slide on there. Typical deals now, we'll just rattle through. I think we're doing pretty well for time at the moment. Little small terraces or semi-detached. This is very typical outside London and the southeast. You're buying properties. I'm using UK funds here because I know the audience is very clear on GBP sterling. You're buying something, 40, 50,000 pounds, renovation costs of 15. You're selling that unit for 80,000 pounds. So you're doing this over a period of about 4 to 6 months. Okay, profiting about 15,000, and your return on cash on cash here, 25%. If you're doing investments in London, because of the price points, and they do work very well, the ROI might be a little bit lower. Okay, that's very typical. That is probably the brownfield site figures I gave you before, about 40,000 a year. The cottage industry, lots of little investors are doing these day in and day out. You did 2 of these a year, okay? You're making £30,000. I would suggest respectfully, for a lot of room, that is an awful lot of income that just goes straight on your bottom line on your projects, however that's structured, okay? You've got this. I know, just respecting the investors' privacy on this one. It's a typical deal. This is more medium now. Actually, it's this building, and it also includes the building next door. Okay, I've just been a little bit vague on the numbers here, just to protect the investor group here. The types of things here. Now, this now is not just apartments. It could be shops, split use. You could do more shops. You could do more apartments. Okay, flexibility. So again, even on an investment model here, they're relatively small figures there. You're buying in that renovation in there. There'll be some professional fees thrown in here. You can see your gross rents now per month are actually very, very high. Your cash flow is exceptionally high, and you can see now your return on investment starting to get a bit bigger. We're not just looking at the standard residential, where you go to the auction sites. We use auctions in the UK. You'll find there that your ROI is now starting to get a bit heavier. There's more involved. Generally, on these types of deals, you pay less to buy the building, but your building costs are a bit higher, a fair bit higher. Okay? Okay, these are my own types of deals here. So we're now getting a little bit bigger now. You can see pretty run down. You can see the economic state on the photo on the right. The rear area, just on that left-hand photo, just see where all the windows are, because we'll do the before and after on these. This area here is Greater Manchester. Okay, it's a favoured location of my group. Here, this was the centre of the Industrial Revolution in the 18th century. So this was the centre of the cotton industry, the coal mining industry, and coincidentally, this town held most of the Industrial Revolution patents. So it was the Silicon Valley of the world back then, and then it went to this. I think there's a bit of a moral in the story. Let's see if that's going to come back a bit with regeneration. So sort of midway on, these are large construction projects now. Okay, that's why investors are in this for a little bit longer, and then you can start to see the quality there. Who would like that? Who would like that building in their portfolio? Hopefully everybody, yeah. Okay, we have a brand. We have a brand for our apartments and our shop units, stairwells, even the apartments themselves. And you can see the before and after now. It's just slightly unfortunate. We just finished this, and we finished this. Normally when we finish these, we normally get a 75% sign up within about a week to 10 days. I've had units finished and they've been occupied within 4 days. That wasn't happening 5 years ago, 2 years ago, 10 years ago. It is now with the business rates community. This here, different income streams. You've got 8 apartments, 7 retail units. I've got underground storage. There's 10 garages underneath storage. Car parking, the areas to the rear. They're all income streams. And on commercial, it's your income stream that dictates your value of your properties. Okay, numbers on there. I've simplified this out. We've put all of the expenses under build costs here. So your done up value there, your GDV, your gross development value, that's the value after you've done the development. We tend to work roughly 75% mortgages, so 3/4 loan. Your money left in, MLI, quite a bit of money for investors. Your cash flow a month, your profit per year, so cash flow, profit, net return, they're all the same types of, that's the same term. And then years to get your money back and return on investment. We're trying to get these commercials now to hop over to 30, 32% on ROI. Okay, it's a great model for our investors. We house people, there's a shortage, and we're now getting really good, what we call mom and pop businesses into those units to take over. Yes, I'm a businessman, but I enjoyed serving my country, and I want to serve the property industry as well, and that's part of it. You see my mantras coming out about here, which aligns completely with Prashant and Shamshad's. Broad Street's a building next door. Again, you can see how poor the area is. The bottom right-hand picture with the silver car there, that's a 3-story section. The rest of this is a big project. It's just vesting out now. It's actually a 2-story building. Okay, although there was this one section of 3-story behind. Okay, you can see fairly rough industrial building on the left. And what we've done here is we've actually put a whole new floor in. Okay, we've actually increased the value of the building by a whole third. Yeah, big project. Okay. A lot of structural items on here, so there's a lot of extra work on here, timings. And you now see the brand. Can you see a clear brand coming out? I really like this brand. I like curb appeal. I come to a hotel, I like that entrance coming in. Yeah, you need to get outside the building. You need to be encouraged to come into the building. Yeah, anybody like to live in that building? Yeah, there's more nods coming on there. I like that on presenting. Up a whole bunch of fees into the refurb here. The end value. Normally you'll find when you do your buildings here, we're just filling the building up now, where you'll get a value pre-rental, and then the commercial surveys will give you a value post-rental. That difference there is worth about 250, about £250,000. Money left in, you're leaving a lot of money in the deal still. You can see now money to get your years to get your money back is now starting to compress, and the return on investment. We normally declare return on investment pre-rental, and we declare a return on investment post-rental. The value of these buildings, you have a building empty, or you have 1, 2, 3 years of rents. Each year of your rents simply increases the value of your building. Okay, it's an industry technique, and it's very, very structured in the UK. Yeah, anybody like that building in their portfolio? And one last one. I think we're doing pretty well for time, I think. So Platfold Street here. Now this is a sublet. So we have a process in the UK, and pretty certain options do exist in various areas of the world. So here, what we've done here, we've taken a 36,000 square foot warehouse, and what we've done is we've sublet this from the landlord. It's held in a commercial pension. So in the UK, you can hold property, you can hold a pension in the commercial element in a property building. Mixed use, it can only be in the commercial bit at the moment. It may change in the future for residential. This is now becoming a really big part of the UK industry, and we deal with people's pension plans here. So kind of a nice building. Excuse my rather scrappy drawing here. It's the only piece I could find. It's a plan of the building. So here, I took this over from the landlord. It was very run down, lots of businesses going bankrupt. Put a compressor business in. We've got a polymer invention business in there. We've got somebody who makes machines for supermarkets. We've a children's gymnasium, pod offices. I've even got my own self-storage business. So this creativity here of being able to build up a business within a business. We've now created a safe building. It is now fully occupied. The landlord is getting his rent, and my rent roll is double the landlord's getting. At the end of the process as well, I've got an option at any time in the next 20 years to purchase that building. And then it'll be mine. And this is where, just to be a bit careful in mortgage regulations in the UK, this will mean I'll put none of my own or my investors' money in, because the value's been based on the rent roll. It's a very, very good technique. Okay, bit before and after. You can see a theme here. I rather like to get rough properties. This is not sexy off-plan apartment sales, big Gucci brochures. This is nuts and bolt. My presentation is probably not as polished as everybody else's today, but this people are smiling. This is good. Smiles and nods are good at the end of a long presentation. But the idea here is you can see the value being built up. Yeah, big areas, big construction, and then you can now see the end product. There's a brand here, isn't there? Yeah, you've got the self-storage unit on the left over mezzanine floors. Very, very engaged about square feet or square meterage on my projects. We want to be able to use a building. Can I get another floor in? Okay, really important. And business rates and rent structures. Sort of pod offices on the left and a bit of advertising. Chap on the bottom right is actually now the Metro Mayor for Greater Manchester. So politically we get them to open up our buildings for us. Those are the numbers there. So you can see return on investment. You get the process now. You can see the gross development landlord to the landlord on his rent structure is very different from mine because I have a much higher rent structure on my sublet. And that's how these buildings are valued. Exercising the option there, I could technically pull out over £100,000 and then you can see the rent structure there and the ROI is infinity. Okay, so that's a bit of a snapshot of the UK market, and I put some personal things in there in terms of the types of deals that I know Prashant and his group's dealing with. Boom.